Welcome to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. I appreciate you tuning in and listening to this segment. And we're talking about the 411 on probate avoidance. That always comes up. I know holidays are very stressful. Unfortunately, I lost 3 of my long-term clients around the holidays and the beginning of the new year. So, things hit home and, there's no guarantee for tomorrow. So we got to understand what the probate court process is. It is the legally, technically process of transferring legal title from the decedent's estate to the new owner or / new beneficiary. So for example, if Marty passes away and he wants his house, and he puts in his last will and testament that he wants his house to go to his daughter, then when Marty passes away, then his estate actually owns Marty's house. And how do we legally, technically get that over to his daughter? Well, we probate the last will and testament, and then we get letters of testamentary, and that gives the executor of the estate the authority to give an executor's deed to transfer that title from the estate of Marty over to the daughter. And we record that. Now the executor's deed says, hey, the estate of Marty via the personal representative has now conveyed and transferred the legal ownership of that real estate over to Marty's daughter, recorded. Now, if you look on the records of ownership, Marty's daughter is now the current owner of that property. So probate is the technical process of changing title from assets in the estate to the rightful beneficiary. Now, is that process lengthy and time consuming and archaic? The answer is yes. So we got to draft a last will and testament. And you listeners here on the Professional Edge know I'm a big proponent of using revocable trust to plan your estate. So that avoids the probate court process if it's a properly funded trust. So if you have a last will and testament, that is like playing Monopoly. Do not pass go. Go directly to probate and probate the estate. So as a listener here on the Professional Edge, we can think of these two things as vehicles. The will is a horse and buggy, and a trust is a motorized car, a F-150 pickup truck. It's going to get you to the same spot, but it's going to be a lot quicker, a lot more efficient if you do it with a trust and not with a will. So, listeners here on the Professional Edge, if you have a will, guess what? Direct ticket to go to probate. Do not pass go. So the 411 on probate avoidance, number one, simple as can be, let's talk about bank accounts. Well, if you have a bank account and it's in your individual name, then how can we change this or modify this to allow that to escape probate court? Well, we can always add another title on that account. So we can have a joint account. So if Marty puts his daughter on that bank account and it's a joint account, Marty passes away, the daughter can walk in with the death certificate because she is a joint owner of that account and withdraw the funds upon Marty's passing. Or here's the downside of doing that is Marty's daughter, she can actually come in and take all of Marty's money before Marty passes away. So one probate avoidance is adding a person to title, but the downside is now that second title holder can have access to those funds. And yes, people do nefarious things for some reason. So there's one. Second downside is if Marty's daughter was involved in a divorce, we know that greater than 50% of all first marriages end in divorce, and then it jumps to 80% on second marriages. So Marty's daughter gets in a divorce. Well, guess what? The attorney for her ex-husband is going to say, well, look at this bank account right here. It's a joint bank account, and therefore half of those assets should be included in the marital assets. So another downside of adding that person to that joint account is it exposes it to the claims of creditors of that joint account holder. Now, did we avoid probate? The answer is yes. But is there a risk? The answer is yes. So just understand it. If you're okay with the risk, then you can add that person as a joint account holder. That's number one. A 411 on probate avoidance on that same bank account. I don't want to add Marty's daughter to that account because of the risk of the creditors. So what I do is then go to the bank, instruct the client to add a POD, a payable on death, on that account. So Marty can add that this account will be paid upon his death to his daughter. Now, daughter has no access to that account currently. It's not subject to the claims of the daughter currently. She can't write checks on it, though. That's another downside. So we have another estate planning document to deal with that. But if Marty wants to keep the account in his individual name, then we assign a POD, a payable on death, to that account. And therefore, that account will avoid probate on that. All Marty's daughter would have to do is come in to the bank, copy of the death certificate. They check the records. It's a payable on death designation. And therefore, boom, it automatically passes over to his daughter and she takes control of that account very quickly. We do not have to probate the will. We don't have to get letters of testamentary if there's a POD on the account. So that's the 411 on probate avoidance for a bank account. Joint title, have some downside risk. Payable on death, the downside is the person cannot write checks if the person becomes incapacitated, in our case, Marty, but it protects it from the claims of the creditors for that joint account holder because we're not going to add that person to the joint account. So that's this Reader's Digest version of avoiding probate on a bank account. Either add title holder or B, make it a payable on death account. And this is some housekeeping that, we ran into this. The client had a trust and then established another bank account. And, he said, I really want this to go to my granddaughter when I pass away, but I don't want it to put in my trust. And I said, okay, fine. What we can do is add her as the payable on death to that account. We're going to still avoid the probate court process. So again, using the truck, the more efficient vehicle on planning the estate and avoiding the probate court process. A lot of attorneys will argue that probate's not a big thing in the state of Georgia or other states. Well, guess what? That attorney is hoping that they get to probate that estate, and all states have statutes which outline the executor's fee and the attorney's fees that can be charged against an estate. So if you want to research with AI, just look up the statutory fees for an executor on an estate where you're listening. And again, you can listen to this podcast on any platform, a Google, Apple. They're there. And if you like it so much, you can also just send the link over to your friend and say, look, the 411 on probate avoidance, there's some good tips in there. You might want to listen to it. So again, we have the show on WDAK on Sunday mornings, but we also then load this up into a podcast so you can listen to it 15 minutes on your way to work, on your way home, or put it on in the shower and get some new information. So again, the 411 on probate avoidance, we talked about the bank account, joint account holder, or payable on death. Now, does the same thing apply with a brokerage account? The answer is yes. So you can have an individual brokerage account, all after-tax money, and you can have it in your individual name, and most brokerage firms will allow you to add a POD onto that brokerage account. So your beneficiary, and it doesn't have to go to one beneficiary, just you can name 25%. If you have 4 kids, it can go 25% to each one. And the key about that, instead of adding a joint account holder to that, then if you have or maintain that individual account, then they get a full step up in basis to fair market value date of death. So that's some advanced estate and tax planning that we do at estate management counselors. So if you want to avoid probate, give our office a call at 404-250-9798. That number again is 404-250-9798. We've done over 3,000 estate plans helping our clients make their plan be very effective, avoid probate at all cost. I disagree with probate's not a big thing in a state. It is. It's long, it's arduous, and it's a public display of information. It is putting your stuff out there on the World Wide Web. Yes, it's a public forum. Your nosy neighbor can go down and pull the probate records. So going back to that joint brokerage account or the individual brokerage account, if I have a designated beneficiary for my 4 children, then they will get the portfolio at a new cost basis, which is the fair market value date of death. So if I had invested $100,000 in this account, by the time I passed away, it was worth $500,000. Then my heirs are going to avoid paying capital gains tax on $400,000 at a 20% rate. That's an $80,000 tax savings. That right there in alone is worth some tax planning. And being a tax attorney as a CPA, I welcome the call to 404-250-9798. That number again, 404-250-9798, and see how this can help you. It's just not the probate avoidance. It's also how do you plan your estate to pay the least amount of taxes? Not necessarily estate taxes, because that only applies to $15 million plus estates, but it's the income taxes that we have to plan for. And there's going to be more coming up here on the Professional Edge on the 411 of probate avoidance, and also a little bit of nuance of tax planning. Being a tax attorney and a CPA, I want to add that value to our listeners here on the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. I appreciate you listening to the Professional Edge.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Sean Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Sean Todd help you implement an effective estate plan. Call 877-654-9798 today. As a tax attorney, CPA for over 15 years, Sean Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. Sean has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net.